Watch this segment. We're going to talk about the Bank of Canada. What's that going to do to real estate?
What's happening this week in real estate with Conrad Zerini, RE/MAX Escarpment and RE/MAX Niagara, and Brian Hogben with Mission 35 Mortgages, and myself, Rob Golfi. Now, this past week, they talked about the Bank of Canada's decision to hold its key interest rate for the second consecutive time is expected. Now, this thing here, like, it didn't make headlines. It's kind of like it kind of whispered itself through under all the other stuff that's happening out there, which is good because before, I mean, last year, every month we were like, okay, we were like glued to the TV, or the announcement, what's going on with the interest rates. Now, this year, just basically, next day, I thought, oh, they announced it? I forgot about it. It wasn't like, what the hell happened?
It's not doom and gloom, you know? So
yeah.
They just let it slide under.
So, you know what? Great news. Totally unexpected. Well, not unexpected. I mean, I'm just saying how things are going this year because we went through 7 months of like crazy weather or crazy weather about the interest rate and the decline in prices and up in interest rates. Now, Brian, what does this mean? I mean, ask Conrad, what does it mean? I know what it means to me, but you guys tell me what's going on here.
Well, I think, you know what, it definitely creates optimism and certainty in the marketplace. You know, number one, a lot of the economists are finally right again. They have been wrong for months. Now everybody in our space was predicting a pause. So the pause stayed the same. The narrative from the Bank of Canada is pretty consistent as well, too. And the other good news is the Bank of Canada doesn't meet again until June, right? So now we get to ride out another. Yeah, I know. We don't have to talk about this till like June 7th. So, you know, what it means is, hey, anybody that had the fence sitting mentality, we're seeing jump back in. And the other thing that's happening a lot now is mortgage renewals come up every month, right? Every month there's more and more mortgage renewals come up. The busiest closing date of the year for us and for most mortgage brokers is June 30th. So what that means is we've got a tremendous amount of mortgages coming up for renewal in the next month or two. Yeah. And guess what? If you had a mortgage that was at 2%, now it's going to renew at 4.5 or 5 or 5.5. I don't care anymore. I can put my house on the market now. I can move and sell now. I'm not hoarding that low rate anymore. So we're seeing a tremendous amount of activity. And I predict that we're going to see a flurry of activity in the next couple of months because of that.
I agree 100%. I think that, you know, don't go away this summer if you're a realtor or if you're looking to buy something. You can't afford to go away. I just did some quick numbers and I did townhouses across Hamilton, Burlington, and they were up for the quarter 6.1% for the quarter, and for the month they were up 3.2%. So take this into consideration. Back in the beginning of the year, a townhouse was $664. Okay, today it's $705. If you look at the interest rate differential, okay, the interest rate today and when it was back then, the payment was around $224 a month different if you would have bought in January, less than today. If this quarter continues at this rate, and it's going to be a quick rate, if I just take the 6.2% the first quarter and apply it to the second quarter, you're talking a difference of $462 a month. That's significant. That's around over $5,000 savings. And think about it. You have to buy today to get to be just $224 ahead. By the time you find a place, it could be 90 days, whatever. Guys, I'm telling you, this has already been priced into the market, the pause. And I think the Canadian consumer already saw it and said, let's go. And here we are today. So, and it happens with townhouses first, right off the bat.
Isn't it funny how, what do you call it? Months of inventory in Hamilton. We're at 1.5 months of inventory as of the end of March. Yeah. And in Niagara, they're at 2.8 months. So like basically in November, December in Niagara, there was like 6 months of inventory. In Hamilton and surrounding area, we're at like 3.5 months. Now, isn't it crazy? Like this here is like adding fuel to the fire. Now, do you think when they see this dramatic increase in sales, house prices going up, do you think the they're going to change and change that in June, or not June, maybe in the next one after that, July, August? Do you think they'll increase it because they say, hey, hold your horses, we got to slow down? Because I can tell you, the market is going to do great this year, like you said, and we're going to come up with another spike. And I always said, the way this market is this year, usually February and March is always a great month to sell, no matter what the economy is. And I proved it. February, March was good this year. I do feel there's going to be another spike, and I feel that spike, like you said, Conrad, it's going to happen at the end of this month or May for sure, because there's going to be people that want to put up their house for sale or want to buy a house, and they want to move because people with kids going to schools, if they're transferring, they want that move to happen through the summer, so they start their fresh school. They don't want to do it in the middle of the year. So do you think this could trigger the government to say, hey, no, sorry, man, we're going to go up? What do you think? I don't know.
I think,
go ahead, Brian. Yeah.
Well, I was just going to say, I think, based on, what I said before with all the mortgages coming up for renewal, it's still taking out disposable income out of certain people's pockets, right? So you're going to have a segment of the population that is okay with the new rates. They were stress tested. Now they're going to move, right? But there's still going to be a segment of the population that's going to be affected, right? There's still going to be people that had a home trust or a B type of mortgage where it's tripled. They had 3% for 2 years and now it's at 6 or 7. Yeah. So you're still going to see a segment of those people and when rates are they're not coming down yet, right? So that's important to remember. They're staying here and they might not come down to the end of this year, or maybe 2024. So I think we'll probably be in a delicate balancing act where it's we're going to see a flurry of activity for those who can, but then also the Bank of Canada is going to consider hey, there's still a segment of the population that's affected by these rising interest rates. And if we rise them more, I think you'll see it pause out and stay the same that way. And I think it'll benefit the purchasers more so than the people that are on the other side.
This is a normal interest rate. This is easy. I don't want to make it sound easy because I know some people are struggling with this new interest rate, but it is a more attainable for the majority of the population to manage. And this is not out of line of an interest rate. Conrad, we've seen 12, 13%.
Yeah. I think the 10-year rate, what's a 10-year average? 3.75. And that's during the last 10 years. And we had 1.9. So you got to imagine if you go 10 years prior to that, the 10-year rate was in the 4s. No, this is a great rate. I'm really bullish. I'm with you, Rob. I don't see a downside. I think, that, and Brian likes these little rhymes. If you wait for the rate, it's going to be too fucking late. I'll tell you that much.
A t-shirt.
That's one of Brian's, right? And I'm telling you, that's going to be true because, like I said, you can't keep people down. You got to remember, there's 30% of the population don't even have a mortgage, so they're going shopping. Look, the canary in the coal mine was about 2 weeks ago. I was in West Oakville, and I saw bungalows in month-over-month price over 6% increase. Bungalows in West Oakville, and you know what they're buying them for? They're buying them for the dirt. They're going to knock them down. Yeah. It went up $105,000 in 1 month. That's showing you there's demand for that. So when people feel confident to build, now it's going to spread all the way through. And those are the people. They're part of the 30% that don't have a mortgage. So they're going to be bullish now. They can come out. I spoke to a landscaper the other day. He says, Conrad, January crickets, February crickets. The minute they announced the pause, my phone rang. And he asked people, he said, what's getting you to spend money and do stuff? And he said, you know what? It's not going to go to 9%. Rates aren't going to 9%. We're all good.
Yeah. And I think to your point, Conrad, too, when you look at the average rate over 10 years being around 3.75, a 5-year fixed rate's only around 1 point above that right now. You're around 4.5%, 5%, depending on what your rate is. The variable, and historically, the variable is not so much higher than the fixed. We're in that segment right now. So people are looking at it when they finally see it and say, oh, I can actually get a rate of 5, 5.25, 5.5. Oh, that's not so bad.
Or 4.5, 4.5, 4.6.
4.5
right?
You can get right now too. If you're an insured mortgage. So it's these rates are 3/4 above historical averages. It's not crazy.
No. It's you know what? I'm looking. There was a property. Hey, I got to tell you something, Brian. Did you see that property show up on Charlton Street?
The one that had the fire?
Yeah. I was all over that. I went there. It came up. I saw it 3-4 days too late. And I saw it It was early in the morning. I go, shit, this is perfect. So I drive there and I walk around the property and I call the agent up and I said, hey, what's going on with this? And I go, I want to get inside. He goes, Rob, I just sold it last night. This was Thursday. This was was it Wednesday or Thursday? I can't remember. Yes, and I go, listen, if that deal falls apart, you call me right away. I go, you know what? It would probably cost $1 million to renovate this place, to make it into 6 to 10 apartments, depending on if you want 2 bedrooms or 1 bedrooms. Conrad, this piece here, the cap rate, I worked it out, is probably like I'm talking about like 7.5 to 9%. I'm telling you, like this thing is like I normally don't jump on this, but it's sold fast, and it was whoever scooped it up did a fantastic they got a nice piece of property. They got a nice piece of property. But before we end, I want to talk to you about one thing. So I bought this property like practically I wasn't even 20 yet, and for $34,000 in Niagara Falls, right? So in 1985, I purchased it for $34,000. So I did the double price, house prices double every 10 rule. Okay.
Oh, okay. Yeah.
So in 1985, I bought it for $34,000. Okay. Now I sold it sometime in I think it was early 90s to my buddy. I can't remember. I think it was like 65,000, 60, somewhere around there, but I can't remember because GeoWarehouse doesn't go back. I'm looking for my records because I kept all my things there in a storage place. So in 1985, 34,000. You double that in 1995, 10 years later, 68,000. Okay, so you double 68,000 and add 10 years to 2005, 136,000. But in between 1995 and 2005, this property sold for $90,000. So pretty well in range. Yeah. So 2005, I estimated it would be worth 136,000. Add 10 years to 2015, 272,000. Okay. Well, in 2020, it sells for 495. My estimation in 2025 was 544. This here, this is the house. This is the house right here.
Yeah.
I screwed up by buying the house next door. It was up for sale for 28 or 29,000. I didn't want to offer higher than 26,000 for $2,000. I was stupid. I regretted it. But what I'm saying is, you calculate house prices double every 10 years. Everyone, I'm telling you, hang on to your property or buy a property. And 10 years from now, you're going to say, thank you. Thank you. Thank you. Hey, Conrad, you know what? Brian, we're all investors, all 3 of us. We buy real estate, and we're in the business of real estate. So I just wanted to share that with you guys. I don't know. Brian, I mean, you must have, I was going to do Tuck It. I got to do Tuck It.
Yeah. Well, you know what? It's, I always end up saying, listen, if you're driving to Toronto and you get stuck in traffic, you don't sell your car and buy a motorcycle. You know what I mean? You stay in traffic till you get there.
That's right.
And if you come across tough times when you own a property, suck it up, pay the bills, do the best you can to keep it, because it's going to be, it's Canadians' #1 investment, right? By large, by far, right?
So, big time.
Yeah.
Hang on to it. You're going to make money. Yeah. Guys, we're almost out of time. Any last words before we cut loose?
Bye now.
That's it. Bye now. That's it. Anyway, guys, have a great weekend. We'll chat soon. Thanks.
Great.